Okay, I'm just going to make some opening comments before we get going with the actual presentations today. So again, welcome everyone. Again, thank you for taking time out of your schedules to join us. This is definitely a very surreal time for all of us. All of our lives have been sort of tipped upside down within the span of 2 or 3 weeks. So what we wanted to do in terms of this presentation today is to provide some practical information. First of all, we've got Gord Sims, who I'll introduce more formally in a second, but I asked Gord to participate in this webinar because, whether we know it or not, some of us, are experiencing very low-grade stress and anxiety, almost imperceptible, and others of us are, a little bit overwhelmed with what's going on. And so I've asked Gord to sort of talk in very conversational style, some ideas around staying healthy through periods of stress. And so we'll look forward to Gord sharing his comments in a second. The other thing to keep in mind is this session is being recorded. So our intention is to load it up and provide a link to you afterwards. So if you want to review the information, you can do that. And as well, for those of you who didn't hear my comments at the beginning, just before we started, if you put your cursor at the bottom of your screen, you're going to see a little box that says chat. You can click that, and it's going to give you the ability to make some comments. You can send it to the panelists. You can send the chat comment to panelists and attendees if you want attendees to see it. But what I'm going to try to do as we go through the presentation, particularly for Gord's presentation, I'll scan the chat comments, and if you have any comments for Gord, questions, I'll try to pick up on those questions as we go along and feed those to Gord. Okay, so hopefully that's fairly straightforward. Okay, what I'd like to do now is I'm going to share my screen with everyone, and we'll get into that. And the first thing that I'm going to do is I'm just going to give you a bit of introduction to Gord. And many of you probably have heard Gord speak at events that we've run in the past. Gord has provided clients over the years great information about maintaining health, various topics, obviously tied into wellness. And Gord graduated with a 4-year doctoral program in the National College of Naturopathic Medicine in Portland. He has a very interesting background in terms of coming from an engineering science background as well before going into medicine. And Gord and I have chatted a little bit about this presentation, and I think we want to make it fairly fluid, and if you have questions, we'll try to capture those questions for you. But Gord's going to talk, again, like I said, about sort of best practices around maintaining our health through stressful times. So Gord, welcome.
Thank you. Good morning.
Thanks so much for participating. And Gord, I'll just kind of turn it over to you. And if you want to get going with your presentation, then we'll sort of segue into various questions along the way.
Well, thank you. So again, good morning to all the listeners. I asked myself what might serve people here. And I'll tell you the kind of questions that I'm getting from patients right now and the type of issues that they're struggling with. First and foremost, as there's a lot of low-level ambient anxiety out there. To state the obvious, the world is really having a moment right now, and many of us are experiencing that very anxiously. So I thought, what can we do? What can your listeners do at home to help mitigate the effect of stress? So stress is not helpful for us tolerating this viral challenge right now. And in fact, we're especially poorly set up at the moment as humans to deal with this. So you'll be familiar with the fight and flight mechanism where the body gets us all riled up. It raises our stress hormones, our cortisol, our epinephrine, our norepinephrine. It raises those hormones, and then it expects us to fight or run, fight or flight. And what we're experiencing as a population now is our anxiety is going up, and then we're asked to self-isolate, which does not particularly help us to lower our cortisol levels. So step one, and this will be intuitive to everybody, is you need to fight or run. Well, you're not going to fight, so you have to exercise. And this is an invitation to all of you to exercise as a serious comment to try to lower our circulating stress hormones. So what does that mean in self-isolation? Maybe, Shaun, I'm not sure how you're doing it, but for me, okay, I love my hockey. I play on 2 hockey teams. Both leagues are canceled. Okay. My gym, I like to do my little workouts at the gym to blow off steam. The gym's closed. Okay. So for me, what that's translated to is I'm having to make improv workouts at home. I have a treadmill. I can do anaerobic exercises. I can go for little jogs while adhering to social distancing. So maybe this is for all of us a moment where we can all be creative and try to get that exercise piece in. With lowering, why don't we just stick on this? Why don't we just stick on this theme here for a moment of what can help us lower our circulating stress hormones? Well, they're beyond exercise. There are mindfulness techniques, and there's people far better qualified than me to speak to that. But it's interesting. The adrenal gland, as you may know, is the gland responsible for secreting our stress hormones. So we want to help that guy during this period. So we can think of pantothenic acid. So B5. B5 is particularly good. The adrenal gland is especially fond of that, and vitamin C as well. The adrenal gland is especially fond of that. So that's those are two steps that we can take, and maybe 2 things that you even have in your pantry. Beyond that, people use a variety of things that help stabilize their cortisol. Rhodiola, there's a plant, an adaptogenic plant called rhodiola, that has a usefulness in this category. Maybe I should, as we chat here, all of us this morning, Shaun, as you were inviting questions as we go, let's make sure that we hear what's on your mind as well and what specifically you would like to talk about.
Yeah, so I think that maybe you can unpack a little bit. There are a few reluctant exercisers out there. So if you had to sort of share what is the mechanism around exercising? What does that do to relieve some of the stress that we might be experiencing during times like this? What does it do? What's the catalyst to help deal with stress?
Well, it's interesting. You were referencing engineering earlier, and I can never get too far from my engineering roots, I find, because I'm often asking myself the question, why were we built this way? Why were we all built this way? And why, under periods of duress, under stressful moments, why is it that we start secreting cortisol and epinephrine and norepinephrine? And that's a useful thing. We think of the stress response as a negative thing. Often it's talked about that way in society, but it's a useful thing because it makes you a better runner. It makes your heart rate go up. It makes you more capable of fighting or running. But that's not what's called for right now. We're not actually in a fight or run. So what you actually need to do is you actually have to get your heart rate up as if you're fighting or running. And that's the physiological mechanism that brings it back down. For me, with patients, often what I'm encouraging them to do is try to get your heart rate up for 150 minutes per week. That's 150 minutes per week. And people ask, well, how hard should I exercise? And as a simple answer, again, let the spirit of pragmatism win the day here. You're not going to put on a cardiac monitor at a moment like this. Just simply exercise hard enough so that if you were speaking on the phone, whoever you were speaking to, it would be obvious to them that you were exercising. So, for example, if you're having a casual dog walk, that does not qualify as sufficient exercise to bring down your cortisol, epinephrine, norepinephrine.
Okay. It's interesting that the subscriptions and sales for Peloton, indoor biking service, have gone through the charts in terms of people ordering those kinds of services. Somebody just typed in, I bought a stand for my bike, got a large screen, and watching virtual cycling on YouTube. I think there's a few people doing that. I do that.
Perfect.
And so you're having to be creative in terms of getting that exercise in. I had to yell and scream at my son because he was actually, we've got a fairly well outfitted exercise weight area. And I came home one day a few weeks ago and the house was full of young guys between the age of 19 and 22 working on our house. I said, Josh, no more. You can't be doing that. But they're all looking for ways of getting their exercise in and hoisting their weights because they can't go to the club anymore and parade around. Well, let's leave that. So exercise is a cornerstone thing. And for those of us that haven't built that into our schedules, it's maybe a new thing. Maybe this is an opportunity during this season to really build that in as we kind of burn away some of the stress hormones through exercise and just dealing with that issue. I've got another question here for you, Gord. Somebody sent in a question which ties in, I think, more into the supplement or dietary regimes, but specifically on vitamin C. And the question was, is it a good idea to take vitamin C for boosting the immune system? And should one be hit by, he's referencing specifically the virus, but I think we want to stay more focused to just, helping our stress response and facilitating that. But he does talk about the virus. And what would be the recommended maximum dosage? So is it good to take vitamin C, and what would the recommended dosage be?
So that vitamin C story is sure an interesting story. I'll get back and I'll directly answer that question on dosage in a moment. But I've been following that story. At a moment like this, there's been all kinds of suggestions on what may or might not be useful. And we simply don't have the benefit of looking back and long studies to ask ourselves whether specifically something is useful against this viral strain. So let's make that comment to start. But this vitamin C story has been so interesting. So there's a Dr. Anderson out of Seattle that there's been a big discussion about vitamin C and indeed intravenous vitamin C. And then there was a discussion as to whether in Wuhan province in China, in the critical care units, whether they were using intravenous vitamin C as a treatment regime. So not sure if that was fact or fiction, but apparently that appeared to be fact. And so I read a summary by Dr. Paul Merrick. He's the chief of pulmonary and critical care at Virginia Medical School. He wrote a very nice summary a few days ago asking ourselves, where are we at? So interestingly, what they're doing is for patients directly affected with COVID-19, they're doing intravenous vitamin C 3 grams every 6 hours. Now, the listeners may ask themselves, well, 3 grams, that's 3,000 milligrams every 6 hours. That is not an especially high, and they're finding it useful. Now, why would they find it useful? Because it's turning out to be a useful anti-inflammatory. That's the mechanism they think it's working by. And actually, maybe, Shaun, if we get a moment, we'll talk about this this whole pathology of the COVID-19, the cytokine storm, the inflammatory storm. But let's not digress from the vitamin C story here for a moment. So for example, when I'm doing intravenous vitamin C for other reasons, there's other applications, the dose is much higher, such as 50,000 milligrams is useful for certain procedures that you can do. But so that's what they're doing. That's what they're doing in some of the ICUs. That's what they're finding useful. It'll be time that tells us that as they look back, whether indeed that has the usefulness that they thought. So what about you guys? What about you guys watching this webinar right now? What can you do at home? Well, for starters, you're not getting an intravenous vitamin C. You don't have access to it. Okay, so what can you do? What sort of oral dosage can you take? Well, it's very reasonable. It's very reasonable to take somewhere between 1,000 and 2,000 milligrams a day. There's a bowel limit, so if you go too high with vitamin C, you will get diarrhea. Usually the bowel limit for that is somewhere around 8,000, 10,000 milligrams. Some people are very sensitive. Well, the work around that is to take it in a divided dose. Mm-hmm. But Dr. Merrick's and I appreciate his comments, the pulmonary critical care specialist in Virginia, his comments would be, why wouldn't we take an additional measure like that, which appears to be useful at first blush, that we are using in the ICUs? Why wouldn't we take that step? So good question on vitamin C. So maybe 1 to 2,000 milligrams. You know what else is interesting on that is it directly an anti-inflammatory effect. Remember, Shaun and I were just chatting about that adrenal gland again. The gland responsible for tolerating stress, that guy is especially fond of vitamin C as well. So interesting.
Hmm.
I think what public health officials are worried about is that people will think that they're bulletproof, that they'll think that there is some magic cure that's going to make them bulletproof, and then they'll disregard the very important measures of social distancing and isolation. And that would not be Dr. Merrick's point on that. It was just please take the additional step of vitamin C, for example.
Yeah, supplementing other measures that are important. So there's a couple of things that came into the chat. I don't think it went to everyone, so I'll just share it. One person said on the exercise front, if it's tough for you, if you have a hard time exercising, don't beat yourself up. Start with 5 minutes and build up from there, which is great advice. Start with little baby steps for sure. Now, there's another question that came in, Gord, which I was going to ask you about. We've talked in the past about what about the role, and I don't know what the role would be in this context around stress, but the role of gut health, probiotics, anything there in terms of this discussion, or is that really a sidebar discussion?
That's a great question. The microbiome, the balance of bacteria in our intestine is turning out to be a super, when I first started practicing 20 years ago, that was a thought, but not the topic it is today. Where should we take that question? Let's take that question here. What is it about? Let's draw that question into a conversation about a inflammatory reaction. Okay, let's take that question there. So, what is it about COVID-19 that's so problematic? It's that it's creating this. It's giving people pneumonias, bilateral pneumonias in both lungs, and it's creating what's called this cytokine storm, which is an inflammatory reaction. It's an inflammatory reaction in the lungs, and people are drowning. That's how things go from bad to worse in this story. So a very strong inflammatory reaction. Mm-hmm. So with the microbiome and probiotics, what turns out to be, and it's the immune system that regulates the inflammatory reaction. That's the domain of the immune system. So what researchers are finding super interesting is the role of a healthy microbiome in normalizing our immune function. So, for example, I'm so grateful to the functional medicine community, the Institute of Functional Medicine. They've been wonderful mentors over the years. These are the guys that run the Cleveland Clinic and whatnot, and so, for example, they hosted in Miami 2 years ago. Their yearly conference was on autoimmunity. So, autoimmunity is an example of where the immune system goes too far; it overreacts. And a very large part of that discussion was on the microbiome and how important it is to have a varied balance of good bacteria in the gut. So I think there's room for that. I think that we know that generally that's useful to the immune system. Let's be mindful not to make any claims directly against COVID-19, but that's a very reasonable thought.
I guess all these things is around the margins, right? It's not just one thing. It's having protocols in place that cover a number of bases. So let's come back to external things that we can be taking to support our bodies to deal with stress. One that you and I talked about, which I think is probably one of the most important, if you had to weight them, but maybe you would disagree with this, but is rest and sleep. The quality of our sleep probably profoundly impacts our ability to fight the stressors in our life. And I think you got a few comments to make in terms of the importance, but also ways that we can kind of help ourselves in that area to have more, just better sleep.
Absolutely. And you know what's interesting about that? So, and we're going to go back to Dr. Merrick's comments here in a moment on melatonin. But what is it that puts us to sleep? Your listeners will. Sleep's complicated. When you talk to sleep specialists, it's a little mystery of human life. What sleep? So, what is it that puts us to sleep? We secrete. Each of us manufacture and secrete our own melatonin at night, and people. I expect the vast majority of your listeners will be familiar with that. So, in terms of sleep, so sleep hygiene, there have been some so sleep hygiene means good practices around trying to maintain good sleep. So there's a psychiatrist, Dr. Gordon Brown. I enjoyed his comments on this point. So one, he would remind us that, hey, by the way, coffee has a 7-hour half-life. Okay, so that means a cup of coffee at noon is like half a cup of coffee at 7 o'clock at night. Okay, well, we're still 10 o'clock in the morning here at 10.
And I'm going to watch it later on.
Exactly. So coffee, all right, that'll be obvious to people. Less obvious, maybe you're familiar with this conversation of the effect of some of our, for example, exposure of light from screens, from our cell phones, from our iPads, etc. That is so fascinating. If you look at the suppression of melatonin manufacturing when put in front of light, they think as much as 40% of our melatonin will be suppressed if we're staring at a blue screen. Well, that's a problem. That's literally like turning on the lights as you're trying to go to sleep. So again, try to be mindful about put your electronic devices away, etc. You know, I found it interesting that the pulmonary critical care specialist, Dr. Merrick, he went out of his way of referencing melatonin in particular. And they're looking at it, and they think fascinatingly that melatonin is looking as if it's having a direct antiviral effect. And it is interesting that as we age, somewhere over about 40 years old, that's why many people as they age start struggling with their sleep more, is that we start manufacturing less melatonin. So an easy fix, if you're struggling to sleep, would be melatonin. What I like about melatonin is it does not share the same dependency issues that other sleeping meds have. Some people are in a real pinch where they can't taper off their sleeping meds. But melatonin has its reputation in helping to initiate sleep. But what else should we think about here? Magnesium. Magnesium's useful here. There's a role for magnesium. People will be asking later, if you're thinking about this, why don't you go to your cupboards and ask yourself, what types of magnesium do you have? There's different types of magnesium, and any magnesium will do here, except if you want to be really picky, magnesium threonate. Magnesium threonate appears to be especially useful at helping to maintain sleep. Interestingly, they are thinking that a cytokine storm, this is another thought, we'll see whether this bears out with time, but this pro-inflammatory response that ends up filling the lungs, it is easier to have a cytokine storm in the presence of a magnesium deficiency. That's interesting. They're thinking about that. So again, I guess the specialist would ask us of all times, if you're don't run a magnesium deficiency. And by the way, they're thinking that turns out to be one of the top deficiencies as a population that we run. Vitamin D, number one, magnesium, number two.
Here's a couple of questions that come in on this topic, Gord. So, and I sort of was thinking about the question. So the first question is, if I don't have problems with my sleep, or it's pretty good, is there downsides to taking melatonin? And then secondly, do you have general guidelines around dosage levels around melatonin?
Yeah, great question from your listener there. So
and
what's this?
Actually, in the question, and also on magnesium. So if you look at melatonin and magnesium, I know that it's hard to do general probably, but there's probably some guidelines around amounts, right?
Yeah, so I know your listeners will appreciate that you can't make specific medical recommendations in a context like this. But let's let the spirit of pragmatism win the day here. And so what do people generally do? Okay, so first of all, in terms of side effect profile of melatonin, you can have nightmares. Some people have nightmares with melatonin, just FYI, or at least very vivid dreaming.
Hey, so can I interject there? I'm not sure if anyone wants to do a chat on this. I started taking melatonin a while back, and I haven't had nightmares, but I've had the craziest. I usually don't remember my dreams, and ever since I started taking melatonin, I remember my dreams, and I've been having the craziest dreams ever. Anyway, keep going.
Right. This is already an animated chapter for us all, and maybe our sleep will be animated as well. Yeah. Yes. So dosage, there's been sure an interesting conversation around dosage. So what's the most common dose? Somewhere between 3 milligrams and 12 milligrams. There are some that are arguing that that is completely underdosing that, but maybe for the purposes of this discussion, between 3 and 12 milligrams. Yeah. Let's not stray too far from the topic here, but melatonin, it's earning a reputation. It's turning out to be useful. It's turning out to be useful in reduction of breast cancer. It would appear. It's being studied very hard in that, and maybe that's part of its anti-inflammatory effect. They're not sure, but stay tuned for that story too. I'm looking forward to hearing the conclusion to that as well.
And what about magnesium? Do you have any general guidelines around dosage for that?
Yeah. So okay. So what's magnesium? We can ask ourselves. These are very. How wrong can you go with this? So that's a good question. There's certain drug classes that you can't just experiment with that can go badly wrong. Magnesium, somewhere between 3 to 500 milligrams is easy to do. Again, some people have some bowel sensitivity with that. So if you go way too high, it'll give you diarrhea. Well, again, the stakes are pretty low with that.
Yeah. Okay. Another participant in the chat suggested, which I've not heard of this before. It's kind of interesting. And again, if any of you have some ideas along the way, don't hesitate to share. Purchased a weighted blanket, and it's made a huge difference to their sleep. Is that something you're familiar with?
Only in part. I've seen and read the same reports, and isn't that interesting? Isn't that interesting? I personally do not have a weighted blanket, but I know people that do and say that it makes a difference. And that is an easy experiment. People will find out in a big hurry whether it's useful to them.
So as we go down the path, we've talked about exercise, the importance of building that consistently into our schedules to make it intense enough to have a benefit. We talked about vitamin C, we've talked about melatonin, we've talked about magnesium. If you had to sort of look at that short list of key supplements or protocols that we can do to support our bodies, any other supplements, and then on that topic, any opinion around hydration as part of this regime?
Yes. So let's, as Winnipeggers, so let's talk about the number one deficiency in the population, which is vitamin D. Okay. Vitamin D has a longstanding known history of being immunoregulatory. It helps our immune systems. So, for example, over the last 20 years, very routinely, people, if people say to me, "Listen, I get 3 bronchitis a year. I get, I catch colds and flus. What can I do?"
So it looks like on the chat function, everyone, is Gord frozen? Can you hear Gord right now? Just send me a chat. Okay, he's back. Okay, hey Gord.
Okay, can you hear me here?
So just go back what you said just a couple of sentences ago.
Okay, so I was just saying, so vitamin D, it's our number one deficiency. As Winnipeggers, we are all deficient. Now, deficient or let me rephrase that. What the optimal, first of all, again, the functional medicine community, they've been wonderful at this, and the specialists. They had to figure out, what are we trying to get to vitamin D wise? And the answer appeared to be, a blood concentration. Okay, this will be different for your listeners, because I'm not talking about an oral dose, but I'm talking about achieving a blood concentration. That's a little bit different for people to think that way. We are trying to achieve, for maximum vitamin D effect, a blood concentration somewhere between 150 and 200 nanomoles per liter. That's what they think perfect vitamin D concentration would be. So that's not bare minimum, that's perfect. Okay, well then your listener's next question, reasonable question, would be, what dose do I need to take to get there? Or should I get a blood test? Well, you're not going to get a blood test at a moment like this, right? You're quarantined at home in isolation. You're not going out to the lab to get a test. So I'll tell you what I take. I personally take 5,000 international units a day. 5,000 international units a day. That's what holds me within that reference range between 150 and 200 nanomoles per liter. At some later point, when this chapter blows over, I would engage you to, or I would encourage you to engage your practitioner and to tighter yourself to those kinds of concentrations. And Lordy, in terms of bang for your buck, you can certainly, that's a good idea.
And I really think that the recommendation to get a blood test is really important. We've done that together over the years. It's always been shocking the amount of time I spend outside. It's not, I think it's a lot, and my levels are always lower than they should be. You actually done injections in the past.
Well, I came back from, this was years ago, this is over a decade ago. I came back from an oncology conference in Carlsbad, and the chief presenting oncologist there said, hey, you know what? Anyone practicing north of the Midwest, of all the simple things you can do to help your patients, this is both in terms of trying to not develop a cancer in the first place, helping the immune system while fighting. Of all the simple things, why don't you just get your people into the right reference range? And I got to thinking, I wonder what I'm at. I jog outside. At that time, I took 2,000 international units a day. I tested my own levels, and I was not in that optimal range. And then I got to thinking, well, who is around here? And the answer was no one. That's not going out of their way to try. So that's a little point. Put that on your to-do list to figure that out in your health. That's worth doing.
Yeah, perfect. A few more people that sort of chimed in that weighted blankets have made a big difference. Here's a question, which I've seen this one a lot. I haven't used it in the past, but the efficacy of CBD oil. Is that helpful for sleep? Is that accurate as a comment?
People are reporting, my experience with patients is that it is not useful to everybody, but useful to some. So I believe there is, and there are doctors that specialize in prescribing this in particular, of which I'm not one, but I believe there's a usefulness in this, yes.
Okay. Are there any other key supplements that we can build into our regime that you think need to be discussed? Have we covered the main ones for the purpose of this discussion today?
You know, one, maybe I can share this point that caught me by surprise. There's a Canadian virologist that was talking about quercetin, and Dr. Merrick put this in his summary. Quercetin, it appears to inhibit. So, what is quercetin? It's a plant phytochemical. Quercetin is an innocuous substance that's used over the years. I've used that for helping people treat their seasonal allergies, and very interestingly, it seems to be inhibiting what's called a heat shock protein. Anyways, it's a heat shock protein 40 and 70. It's this protein that that's necessary for viral replication. So that one we did not expect, and boy, there'll be a lot of study coming out of that one. And again, their comment would be, okay, well, why not take that step? Anyways, it's a point of interest.
One question was, what is CBD oil?
Cannabis. The CBD is derived from cannabis oil.
Um, Now, any other topics that you wanted to venture into for the purpose of our discussion today, Gord, around managing successfully through stress?
Well, I would just, my hope, what's my hope for you guys? My hope is that, um, that you feel this is a tough moment for all of us, and that you feel empowered to get the population all wound up and fearful about something you can't see and that you don't know if it's coming your way, and then for people to feel powerless to do anything about it. Um, you want to give people meaningful suggestions that they can do to affect the outcome in their health, and that's really what my hope for your listenership is today, that they can take steps that can help them at a moment like this.
Which I think definitely you've done. I think that to be reminded about some of these strategies, and like you and I discussed before the webinar, and certainly it's true, it's not just one thing. It's trying to attend to all these things. And the other things we think about, relationships, I mean, I commented someone the other day, like I almost never see my two older boys. They just kind of disappear through the week. And I've spent more time around the dinner table with Joshua and Avery than I have in months. And, there's been great conversations. So there's some unintended benefits of this, is just more time with family and going for more walks. And so it's a mixed kind of mix of things, right? Some stuff's good, some stuff's bad, but very helpful advice, Gord. And any other concluding comments, or are we good?
No, I would just wish your listeners good health, and this chapter will pass, and hang in there, and please, all of us, myself included, let's do our part to good what they're recommending: good hand washing, good quarantining, etc.
Perfect. Thanks so much, Gord. I think Gord's going to stick around with us for the second half of the webinar, because he said to me, probably the most important discussion, it's not about our health, it's about our portfolios. Just kidding. But Gord, what I'm going to do is I'm going to change your settings so that you're muted at your end.
Okay.
If you want to hang out and hear some of the presentation, that would be great. So thanks again, everyone. And then if you want to, in the chat function, thank Gord, that would be awesome. And again, appreciate you making time on your Friday for us, Gord.
Well, listen, my pleasure. Good luck to everybody.
Okay, thanks so much.
Welcome.
Okay, so what I'm going to do now is I'm going to segue from Gord's presentation. Obviously, the portfolio piece is an important piece for all of us. This has been a very challenging few weeks in capital markets. And what I'm going to do is I'm going to share my screen. I'm going to cover off a bit of a presentation that I put together. And I'm just going to go through it. And I have a few questions that have come in, not a lot of questions, but a few questions have come in advance on investments and just the current situation we're in economically. So I'll cover off those questions. And I may not be successful. If you have questions that come up, and again, thank you everyone for saying thanks to Gord. I can see the chats coming up. If you send in chats while I'm going through my presentation, I can't promise that I'll necessarily see them. I'll be a little bit distracted, but I'll try to watch for any comments that get made. So let me just share my screen here. So when you go through this material with me, as we go through it together, there's going to be some information that we've already covered off with previous videos that we have done. So at the risk of being redundant, I'm just going to cover some of this anyway, because some of the people on the call or the webinar today have not seen the information. And for those of you that have seen some of this information, I think it's just a good overview. I'm going to talk a little bit about the current reality, but I'm also going to talk about some principles that we always need to be mindful of when we're going through these times. And then we'll talk about some basic points that will make us a little bit hopeful about, there's light at the end of the tunnel. So we're going to focus not just on today, but look at the next, few months to the end of the year. So I'm going to go over some information that hopefully you'll find helpful. So let's continue on here. So the first thing that I want to just talk about is the fact that the reason that we're in this situation, so many of our clients have portfolios where we've got exposure to growth assets or the stock market. That's just a reality. And part of the reason for that reality, and we've talked about this before, is that we've been in this 3-decade decline in interest rates. I remember when my father, he retired in the early 80s, and my dad got pensioned off, and many of you remember that 1981-82, we saw some of the highest interest rates, well, the highest interest rates we'd ever seen. And he was very fortunate because he locked in an annuity for the rest of his life at the highest interest rates we'd ever seen, and then rates began to fall gradually. Well, back in 1981-82, if you wanted to generate $25,000 of income from your portfolio, let's say you're buying a GIC, you needed under $200,000 of capital to do that. And then as interest rates fell, you can see this green line from left to right, rates have just cratered. And so to generate that same $25,000 requires, over $1.2 million of capital. So as a practical matter, investors have had to migrate assets to the stock market. And one of the downsides of the stock market is that even though it holds the probability over time of delivering a certain kind of return experience, as we hold those assets, there can be short-term volatility. Now, we all kind of understand that intellectually. I know our clients do. But it's one thing to understand it intellectually. It's another thing to go through a bear market cycle. Whenever we experience it, and we don't know when it's going to happen for sure, it's still difficult. Even though we might have a background in terms of how we need to behave through these cycles, it doesn't make it any easier. So the reason we wanted Gord to speak to us is to help us sort of, create that resilience, not just from a health standpoint, but as investors to be in resilient investors. So we've seen this migration from GICs and bond investments to stocks as a higher percentage of portfolios because of the low interest rates. Now, you've seen this next chart before, and I'll just go over it with you. And I made the comment here, successful investing is really, really hard. So when you look at the markets, this is a chart I pull out quite a bit because it's very instructive. These bars basically show you, what happens in the market over time. I can make it a little bit bigger. So you can see here between the year 2000 and 2010, the S&P TSX had a compounded return of 6.6% per year over that time period, including dividends being reinvested. And there was a lot of volatility through that period. So if you just put your money in the portfolio, never looked at your statement again, and open it up again, 10 years later, that's what your experience would be. And then you can see if you'd missed the 10 best trading days, roughly, let's say 2,500 trading days over that time period, your return was 0.3%. And if you missed the 20 best trading days, your return was a minus 3.6% compounded. So we extract from this chart that there's actually very few days in the market that drive most of the return. So what we learn from this information is the minute that we decide when we build a portfolio and we feel that we need to have growth assets in the account, at least from a probability standpoint, it's not a good strategy. Once we make that commitment, we build the portfolio, we need growth to get the returns that we aspire to. If we think that we can time the volatility, like, there's news that is negative, let's pull money out of the market. Let's then go back to the market when the news is more positive. And I can guarantee to you that anyone that leaves the market will need a tremendous amount of good news to move back in. But what happens is the chances of missing the explosive growth that happens from time to time is very high. Good examples, just over a week ago, we saw in 3 days the market respond highest valuation growth since 1933. Now, it wasn't enough growth to make up for the losses previous to that, but at least clients experienced that growth that they had not capitulated. So it's important that once we build a portfolio, once we have growth, the timing issue, I think clients sometimes think is very simplistic. Just stay invested, hunker down, get through this time period. But it's a strategy that's proven to be successful over time, as hard as it is from time to time. The last few weeks, this chart I've shown before, lots of volatility in the market. And we will continue to see volatility. Notwithstanding the fiscal packages passed by governments and monetary support by central banks, governments trying to support the population that's been negatively impacted economically, we will see volatility. We'll talk about what's going to trigger a recovery through this period of volatility. We think that probably we've tested the lows. We're going to be doing more bouncing around based on news that's going to happen over the next little while. But obviously, there's been a tremendous amount of daily volatility in the markets. So where are we at? Of course, this is not news to any of you, but of course, we had the COVID-19. And as we saw that spreading globally, and then we have a global pandemic, then governments obviously were encouraging and then mandating social distancing. And it's had a devastating impact on the economy. Capital markets as a reality have obviously repriced the assets because we have no idea what's going to happen in the next several weeks in terms of economic activity. And that's the reality of the world that we've been living through. And I'll come back to what we think is likely to be the track that we'll run on that has a light at the end of the tunnel. Now, why I bring that up is that going forward, many of us can hunker down, but if the news continues to be negative or not a lot of positive news, we're going to get caught on this cycle of investing chart. And that's why looking after our emotional, psychological, relational health resilience is so important, because during stressful times, it's very difficult for us to make high probability decisions. We have, how things have changed. Mid-February, we saw the high water mark of markets. We saw encouragement. People, liked what was going on. And then within a very short period of time, we've gone to, capitulation, despondency, maybe a lack of hope for some people. So just a lot of anxiety. And for many people, my experience generally with clients is it's more about hunkering down. No one's happy about the situation, but they're kind of being pragmatic. But the longer we go with the cycle, the more the emotional piece can kick in. And what happens as we see that experience taking hold of us is that the anxiety, which leads to more stress, which leads to reduced cognition because we're not thinking as clearly as we should, those are the times we need to be really careful to look after our mental, psychological, and physical, emotional health. Because if we don't attend to those things, then the ability to make logical, high probability decisions is compromised. Now, again, I think most of us know this, but I think it's important to remind ourselves of that cycle. Now, the reason is important, many of you have seen this particular chart before, is the S&P 500 index, so the broad index in the United States, versus the average stock investor for a 20-year period ending December 31st, 2012. And what you can see is the net return to the S&P 500 was 8.21%. And investors on average, when you take into account adjust for management fees and that kind of thing, the pure investment returns were 4.25%. And when the analysts looked at the study, what they found was the biggest reason for the performance gap was just behavior. And we actually saw that in the worst part of the market correction recently. So we had 3 phases of money leaving the market. The first phase was asset managers selling off positions that were just subpar securities. And they had concerns about the stocks. They weren't great companies. And you saw a sell-off of the weaker companies pretty quickly. The secondary sell-off, and I talked to many clients about this, is leveraged investors. So because interest rates have been so low, leverage investing has just been a pretty significant part of the market, particularly institutionally. And so if you're securitizing your loans against assets that now have suddenly dropped in value, what does your banker do? Banker wants more money to cover the security. And if you don't have the money, you have to sell off your positions. And that's the secondary wave of sell-offs that took place. And then the third component was panic selling. So as we dissect the data in that worst part of that week, there were a lot of assets being sold that it didn't make any sense that they were being sold. These are high quality companies that we knew had a very high probability of coming through this period, and yet they were being sold off. And so a lot of that is the emotional behavior that kicks in, and it's something that we need to be really mindful of because it can blow up our performance. These are the times when we can make tactical mistakes. So I'm just going to show you a few charts, which many of you have seen before. I'm not going to talk in detail about this chart, but really what it's to illustrate is that on average, if you look at the bars above the zero, those are bull markets, so broad markets going higher. And then the bars below the zero are the bear market cycles. And what we know historically, and many of you have seen this chart, is that the bull markets on average last much longer than bear markets, and the totality of the return is much higher than the loss that we go through. So even though it's difficult to embrace this information during a bear market, it's important to keep it in mind. The other thing that's important to keep in mind is that volatility is not, an unknown factor. I've been saying to clients, book in your year, look at January 1 and look at December 31st. To me, that's the important time period to look at here. Because if we look historically, this goes from 1980 all the way through 2014. And the blue bars here are the positive years, and the, orange color is the negative years. So on average, the market's up 75% of the time, and it's down the remainder. But even in years where the market was up, almost every single year, there were intra-year periods when the market was down. I often tell the story of being working for Royal Trust in 1987. And in October of 87, the market sold off, 35%, let's say, at the worst point of that year. And I was working in the branch, and I was responsible to be at a desk marketing GICs and term deposits and mutual funds. And we had the lineups through that crisis of people going in the branch, cashing out all their mutual funds, and then buying GICs. Now, GIC rates were pretty good at that time. We're talking, 7%, 8%. But what happened is by the end of that year, with the market being down 34%, the market was actually up by the end of the year. Now, it doesn't always happen like that, but there was a significant volatility, and yet many people captured that loss, crystallized the loss. So it went from a paper loss to a real loss, and yet they were in positive territory. So volatility is a reality. We know that intellectually, but again, it's just something that when you start going through it again, it's sometimes hard. Now, this chart I shared previously, again, it's just the same kind of idea. As we go through recession in 2008, we saw a very significant recovery. And so the probability is as we go through these recessionary cycles, we will see recovery. And if you look at 9 months after the financial crisis, which is a more significant decline in capital markets back in 2008, the S&P was up 66%. 9 months after. The TSX Canadian market was up 55%, and the European market was up 53%. Right, so we had very strong recovery. Now, here's one of the reasons that you see the recovery. So, what's happened, and this is a natural kind of thing. And many of you, when you look at your portfolios, we've got internal to the portfolios, you've got fixed income assets in the bond market, you've got cash equivalents, then you've got growth or stocks. And what happened through this crisis is that money came out of stocks pretty aggressively. And as the price of the stocks went down, the dividend yields in those stocks have been going up. So at the same time that was happening, money was moving across from the stock market to the bond market. And as money was going to the bond market, it was forcing up the price of the bonds and bidding down or forcing down the yield. So we have a situation right now where effectively fixed income assets are generating basically zero yield. And yet the stock market today, for new money that might go back to the market, we're seeing dividend yields, not in all companies, but in many very high quality companies. And the Canadian banking sector is a great example of this, where you're seeing dividend yields, if you bought the companies today, of 6, 7, 8, 9, 10%. So even if the share price didn't move and you didn't have any price appreciation, you'd have in perpetuity a yield of 6 or 7 or 8%. A multiple enhancement to what bond yields are right now. The reason I bring that up is that there is a very important priority out there, and that is a hunt for income. So as the dust settles on this, many investors, particularly pension plans, will begin reallocating assets to grab hold of the income that's available. And these are once-in-decade opportunities. These kind of opportunities don't come up very often. So you'll see a lot of institutional money managers moving in this direction to try to capture this yield. The banking sector is a great example. In 2008, they didn't cut their dividends. They maintained their dividend structure. And we would expect that that would likely be the case in the Canadian market as well. The banks will likely not cut their dividends. That's a low probability of happening. So this is one of the reasons why we are optimistic that at some point as the dust settles, we're going to see a shifting of capital pretty aggressively to high yield assets. The second issue is pension plan allocations. So again, it doesn't get talked about a lot, but behind the scenes, you've got pension plans who are some of the largest asset managers in the globe who have target investment mixes. So basically the way it works, you've got a population group in a pension plan, you've got money going into the pension plan through contributions, you've got money going out to fund incomes, the actuaries get hired, actuaries confirm here's the return you need to fund this pension to make sure it's actuarially sound. That return then drives the investment mix. It's a very sort of methodical systems kind of process. So that mix defines how much in real estate, how much in cash, how much in the bond market, various types of bond instruments, how much in infrastructure projects, how much in the stock market. When you see a decline in assets in the portfolio, and so the mix gets out of whack, now it's out of the target range, then you begin to see a rebalancing. So we're going to be seeing rebalancing on pension plans over the next number of weeks. And as a result, we're going to see money flowing back to equities to create that rebalancing. So I'm not trying to be Pollyanna here. This is kind of a reality in terms of asset flows. We've seen it before. When yields go down in one asset class and yields go up in another asset class, it triggers that flow of capital. And then we've got the rebalancing that's going to take place as well. Now, the next few weeks are going to be obviously a real challenge. One of the money managers that we follow, Monroe Partners, did a study, and I think it's fairly well-known information, but the study basically said once a country hits 100 deaths, from that point on, it takes about 20 days to hit the peak of the virus's trajectory. So until we get to the point with most countries, and we've seen this already with some countries, obviously South Korea, Taiwan, even Italy, we're seeing that plateauing happening. So we're still waiting for data, whether it's France or Germany, although Germany, it seems to be doing pretty well at their containment strategies on the virus. China put a question mark there just because there's concerns about whether the data is fully accurate. But this general trend line means that 20-day period as we go through this month is a really, really critical time. Now, if we begin to see a flattening of the curve, capital markets don't need to have everything perfect for money to flow back into the market. What they need to see is progress. So we always need to keep in mind that capital markets are looking into the future. They're not looking at just today. And so money will move in the direction of various assets if it's believed that the future is incrementally getting better. So one of the metrics that they're going to use is that curve flattening, and are we seeing progress? If we begin to see that, we will see more money flowing back into the markets. The secondary wave that's going to kick in is the economic improvements. This is going to be a tough one. It's going to take a lot of wisdom by policymakers to kind of figure out how do we go from a situation we've completely shuttered the economy, like literally shuttered the global economy. There will be downstream effects that will last forever in certain industries. And there's this balancing act between fighting the virus and the impacts from a health standpoint, but also taking into account the downstream impacts of an economy that's been shuttered. And there are negative health consequences that flow out of that as well. So it's not a zero sum. It's not like we can shutter the economy. It's just a financial decision. It's a healthcare crisis decision as well, because there are issues that will come out of that. So what we expect will happen is a gradual opening up of the economies, and this gradual step up will begin again to show to the markets that we're making progress. And in all likelihood, when you look at, and I don't think this is a low probability, this seems to be what asset managers are talking about, is that as this gradually unwinds, by the time we get to the fourth quarter of 2020, we could see some of the largest GDP growth numbers that we've ever seen. So we all kind of know it anecdotally. We've got this pent-up spending, socializing, things we want to do, travel, although that might be impacted for a while. But there's spending that's going to happen in the economy. Maybe not right away. People can be a little bit careful, a little bit gun shy. Some of this is tied to the vaccination and the success of the strategies we're using right now. But the curve will flatten, we will see progress, and we'll see the economy coming back. So one of the things we talk about in the videos is this sort of buy side of the economy. Through an external event, health crisis, impinges the economy, capital markets react to that. Eventually when the buy side comes back, people are spending money again, we'll see improvements in the market. And we should see improvement this year. Now, the thing that I want to talk about is just to remind you, so that's hopefully the encouraging piece, right? That's sort of the pathway to what we think is going to happen. A couple of things. First of all, and this is something that I think is very valuable for clients, particularly clients that are retired right now. One of the things that we've done with client portfolios is we've made sure that when you look at your portfolios and take a look at the accounts, we've always recommended to people to have income-wed strategies, safe harbor assets that are there to be liquidated or used to provide income. So it's almost like you compartmentalize your portfolio. You've got the growth portfolio that hopefully gives you above average returns compared to the risk-free returns that are available. And then you've got safe harbor assets that are being used for income. So we have the safe harbor assets for times like this, that you don't want to be selling assets at losses to produce a steady rate of income. The second piece that I think is really encouraging, and we went through this exercise with clients back in 2008, is to reconfirm, like, where do you stand? What are your goals and objectives? What are the return requirements? And I've done this a few times already. Whenever I'm sitting down with a client and we're going, okay, here's the retirement forecast. Here's where we were mid-February in terms of the long-term forecast. Here's where we are now based on the adjustments to the values. I don't think that that's a permanent situation. I think we're going to see significant improvement by the end of the year. But if we didn't see improvement, how does that look? And what I'm finding is it doesn't change the long-term retirement outcome. It does change, if we didn't see improvement, the terminal value of the net worth statement down the road. But every time I walk a client through that, it's just a great peace of mind exercise. So I just bring that up as something that if you are feeling a little bit anxious about some of the things going on and you want to just get a sense as to where you're tracking right now, obviously over the next couple of months, that would be a good exercise to go through. So what are some takeaways? I've gone on too long, but basically we've seen unprecedented accommodation by central banks. Obviously, there's been incredible fiscal stimulus. So you can't, in the US, I mean, the total package is like $6 trillion between monetary support and fiscal support. That's going to help. It's not going to solve the whole problem. It's going to help. Lower investment leverage, that's now out of the system, so it's kind of purified the system to a certain extent. Yield will become very important, so always keep that in mind. Investors are quite pragmatic. If you can get a 7% dividend yield when bonds are paying close to zero, that's going to become compelling at some point. The economic cycle will emerge. The buy side will come back. You can't time momentum and recovery. As frustrating as it is, no one's built a model that can really accurately predict that on a consistent basis. So you want to play the high probability game, hunker down as difficult as it is. Within your portfolio managers, what's been going on is they've been, they cycled very quickly out of sectors that they knew would be hard hit through this period of time. They moved to sectors that would be resilient and would come out of this difficulty very, very well. So I think sometimes clients feel like it's kind of a black box, but there's definitely intervention going on. For those of you where we're using rebalancing programs, when you look at your transaction statements, you're going to see money being sold from bonds going back to stocks, just like what pension plans are and will be doing. As hard as it is to see that going on, intellectually that's the right decision. Let's rebalance the portfolio, give our portfolio managers cash now to seize upon opportunities that will be emerging over the next few weeks. And the last comment I make is that for those of you that are retired, I think this is a good reminder, this chart. Fortunately, we've been harvesting profits along the way. So for our retired clients, it's not like, yes, this is a difficult time right now, it's anxiety producing, but we've been harvesting profits along the way. And so it's not like we've given up those profits, you've been capturing them and using them. So let me just leave this. I'm going to stop sharing my screen, and we'll see how many people are still with us. Amazing. I still have the same number of people watching as what started when we began the presentation. I know that you were here mostly for Gord. Okay, let me just answer a couple of questions here and see if there's any more questions for me. So I'm now looking at the chat. So let me just share with you a couple of questions that came in. So one question, and this has been actually a question that's come up several times, and that's, is this a good time to invest back into the markets? So what I would say is yes. I don't say that in a trite fashion, but it is a time to move back into equities for those people that have the intestinal fortitude to go in that direction. Very good value, very good income available. The downside to doing it is there's always in the short term the chance that we're going to see some continued volatility. But if you have a time horizon going out a year, 2, 3 years with that investment back to the market, in our estimation, you're going to be well rewarded for that decision. So in general, I think that it would make sense to do that. Another question that I have here is there any way to tell the outlook, or are stocks still volatile? So again, good question. I think that the outlook towards the end of the year is cautiously optimistic. I think the outlook over the next few weeks, I think we're going to see quite a bit of volatility. I don't think we're going to test the bottoms we saw before, but we're going to see this because the markets are just going to be just focused on every little bit of news. And as unemployment numbers go up, I mean, it's horrific. The U.S. now is up to, I think, close to 10 million unemployed between the most recent numbers and numbers from the previous week. A lot of those jobs are going to come back, not all of them right away. But the short-term impact of that is obviously it creates a lot of anxiety. So I think in the short term, there's going to be that bouncing around. And we really need to get through to the end of April into midpoint of May. We'll see some progress on this virus, and that will begin to change the course direction of capital markets. Nagging thought, the dark recesses of my mind about how the Canadian government is going to be able to financially support all these far-reaching financial COVID-19 aid programs. So we're not focused on that right now, but it's a real concern. So we're going to get through this, and we're providing the necessary supports economically. But one of the real big concerns, I think, in Canada, and this is going to come across as a kind of sound like a political statement. It's not meant to be. But we don't have a lot of margin. The unfortunate thing about Canada, we're a relatively small country in the economic scheme of things. I know many people listening to this webcast, I mean, would have concerns about the trajectory of where we're going with non-renewable resources and the carbon footprint and the impact. But the practical reality for Canada is a large percentage of government revenues are generated from the resource sector. And because of either a lack of policy decisions or just not an environment that's been pro-energy sector, we've completely kind of gutted that sector. And now they're being hit hard with this price war that the Saudis and the Russians are sort of forcing. I think their main attack is on the US, but I think they would love to destroy the energy sector here. And we've lost a lot of big players to the US. A lot of money's not coming here for reinvestment. So that's a long-winded way of saying we will have some headwinds coming out of this. Those headwinds probably won't hit right away, but the practical reality is when you take on this much debt, eventually the interest rates are going to go back up. And as those rates go up, if you haven't made any progress in getting the debt deficit down and you're not making any progress in paying down the debt, ultimately there will be some hard questions around program spending, tax rates, where we're going to get the money from. Those aren't issues today, but I think it's a fair question. They will be for sure issues over the next 5-10 years as we try to figure out how to get our financial house in order. Fortunately, interest rates are very low, and so we can take on a lot of debt. It doesn't have a huge impact, but the comments bang on it eventually will have an impact for sure. Well, those are the main questions that came in, and let's see if I got some more here. So I've got another question here. It's a good question. What do you think is the future with bonds as fixed income portion of the portfolio with interest rates going to zero? So I don't think it's an immediate issue right now, but the bond market, I mean, it hasn't been a completely smooth ride, but generally speaking, the bond markets help to support client portfolios through this downturn. Again, there's an inverse relationship. Stocks go down, assets go to safe haven investments. Bonds would be one example, particularly government bonds. At some point, interest rates are going to start going up. And so the conversations that we're going to have with clients will be a little bit around, do we need to introduce investments that really tap into the yield opportunities within the bank stocks and other companies that pay great dividends as an alternative to bonds? Secondly, do we need to be using more cash equivalent or GIC type investments? Because there is an inverse relationship between interest rates going up and bond prices going down. Those aren't questions I think we have to have closure on today, but they will be questions over the next 1, 2, 3 years that we need to be focused in on. So that's a great question. Let's see, what else do we have here in terms of questions? This is an interesting question. Would this be a good time for those with expendable cash to make some general purchases to sort of help out the economy and our younger counterparts? Yeah, and I think that one in some ways is going to look after itself. As this virus peaks over the next few weeks, we're going to see lots of spending. But you're right. I mean, I look at my daughter Hannah, who was going to start her legal internship job with a financial firm in Toronto, going back the second year, really excited. Avery had an investment bank, well, he has an investment banking job in Toronto again this year. And they're both kind of waiting. They haven't gotten, usually they get confirmations by now. They were told they have the jobs, but there seems to be this dithering around the details around the work. And the general feeling by a lot of interns and young people is, am I going to have a job this summer? So hopefully they will have their jobs, but there's going to be a lot of collateral damage for the kids and many young people. They'll get through it. They're resilient. Eventually, things are going to come back, but it's going to be a tough time, and parents may be called in to provide a little more support and encouragement. And eventually, as the economy recovers, those opportunities are going to come back. I don't have any doubt around that, but it's going to be a stressful time for them. I just look at the kids. For us, I'm not sure for many of you, it might be grandchildren or young adults in your family circle. This social distancing is just killing them. I think one of my kids went to a parkade. It was raining one night, and they drove their cars to a parkade, and they kind of hung around and social distance and communicated, but they're just dying to be with one another. So it's a very, very difficult time for them. Anyway, thank you everyone for participating in this webinar. Like I said, we are taping this. So for what it's worth, I mean, I've kind of droned on for a while, but for what it's worth, we've got the tape. We'll alert you to when it's uploaded. And again, if you have any follow-up questions, on questions specific to your circumstances, if anything gets triggered as a result of this webinar, just be sure to send Janelle an email, reach out to us. If you don't happen to have it handy, go to our website, humphrieswealthgroup.com. You'll be able to contact us through that portal as well. So have a wonderful rest of your day today, and I look forward to continuing conversations. And also look for these webinars. If this worked okay for you, what we like to do is do these pretty regularly, and the future ones might be a little more compact and maybe shorter, but hopefully you found this format helpful. Anyway, you take care. Bye-bye.